5 stock picks that billionaires love. Hey guys, today we're going to list 5 stock picks that billionaires love. Let's get right into it. Number 5. Activision Blizzard. According to Forbes, Daniel Loeb is the CEO and founder of Third Point, a New York-based hedge fund that manages $19 billion in investor assets. Since its inception in December 1996, Third Point's offshore fund has delivered an annualized return of 15.5% per year, which is higher than the market's historical 10% average rate of return. Third Point, according to its website, seeks to identify situations with a recognizable catalyst, which we anticipate will unlock value. Activision Blizzard is a leading game developer in a $175 billion industry. It has a long track record of increasing profits and providing shareholders with market-beating returns. However, the stock plummeted toward the end of the year as a result of a lawsuit and investigation by the Securities and Exchange Commission into workplace discrimination. As a result, the company announced the postponement of 2 important upcoming releases that were scheduled to be released in 2022 and drive near-term growth. Third Point most likely sees Activision Blizzard as an undervalued entertainment company ahead of 2 major releases that are expected to serve as key growth catalysts. Overwatch 2 and Diablo 4 are both expected to be released. Number 4. Alibaba. Charlie Munger has been Warren Buffett's business partner for decades, serving as vice chairman of Berkshire Hathaway. Munger is also the chairman of Daily Journal, a media and technology firm where he contributes his investing expertise. From 1962 to 1975, Munger ran his own investing partnership, earning a compound annual return of 19.8%. The Daily Journal disclosed only 5 holdings in its most recent 13F filing for the 4th quarter, including Chinese tech giant Alibaba. Over the last year, the share price of Alibaba has been cut in half due to Chinese regulatory authorities crack down on large internet platforms. Alibaba has divested some media assets and is also facing increased scrutiny in the United States. The SEC recently finalized a rule that allows for the delisting of foreign companies that fail to comply with auditors' requests for 3 consecutive years of data. This means that US shareholders may lose their investments indefinitely if they are unable to execute trades once the company delists from US exchanges. Some companies can offer share buybacks to compensate shareholders, but it's unclear what options US investors would have if Alibaba was forced to delist its shares. Munger clearly sees a deeply undervalued business with exaggerated risks. The Daily Journal's stake in Alibaba more than doubled in the 4th quarter. Number 3. Chevron. Since taking over Berkshire Hathaway in 1965, Warren Buffett has delivered an annualized return of 20% per year to shareholders, so it's always worthwhile to see what the Oracle of Omaha is buying. Berkshire Hathaway reported its first Chevron position in the 3rd quarter of 2020. During the 3rd quarter of last year, shares traded as low as $70, or nearly half the current share price. Buffett, on the other hand, has been steadily increasing his Chevron stake, even as the stock price has recovered. Berkshire Hathaway held 28.7 million shares at the end of the 3rd quarter of 2021, valued at $3.6 billion at the current market price. Given the long-term shift toward green energy, Chevron's investment is intriguing. However, Buffett stated at the Berkshire shareholders meeting in 2021 that the world will require hydrocarbons for a long time and that we'll be glad we've got them. He clearly believes Chevron's intrinsic value is greater than its current share price, and he's already earned a good return on the stock. Chevron's dividend history will appeal to income investors. Despite volatile oil prices, the dividend has increased by 65% in the last decade. Chevron distributed 70% of its free cash flow in the previous year, bringing the current dividend yield to an above-average 4.25%. Number 2. Seagen, a biotechnology company specializing in oncology treatments. Couldn't get a bigger vote of confidence than being Baker Bros Advisors' top holding. Julian and Felix Baker, billionaire biotech investors, lead this New York-based hedge fund with $35.8 billion in AUM. The brothers may be low-key, but they're well known in the world of biotech stocks. According to Forbes, the Bakers' combined fortune is estimated to be around $4 billion as a result of a series of successful investments. And based on their most recent regulatory filings, the brothers have high hopes for Seagen. The stock pick now accounts for nearly 1/3 of the total value of the Baker brothers' holdings, up from 28.5% 3 months ago. The increase is due in part to Baker Bros purchasing an additional 17,500 shares of Seagen in the 2nd quarter of 2021. True, the increase is less than 1%, but it follows a 347,745 share increase in the 1st quarter. At the end of quarter 2, the fund's total holdings of 47.3 million shares were worth $7.5 billion. Number 1. Amazon.com. Windcare Partnership is serious about its Amazon.com stake. The $5.8 billion AUM Houston hedge fund initiated a position in the e-commerce giant in the second quarter of last year, but it really got down to business in the second quarter of 2021. In the most recent quarter, Windcare increased its holdings by 32% or 55,500 shares. The increase kept Amazon as the fund's second largest holding, accounting for 17.2% of portfolio value, up from 13.2% in the previous quarter. As of June 30th, Windacre's total stake of 226,400 shares was worth $778.9 million. That's all for today, and we'll be sure to catch you all in the next one.